All right, so welcome everyone. Weekly market wrap with the ICICI Direct and of course पंकज सर के साथ. तो आज का तो सर वीकली रैप मतलब इट्स आई थिंक पिछले 4 का मिला के जो हम लोगों की रेंज थी वो एक वीक के अंदर हम लोगों को देखने को मिल गया मार्केट का मजा. सो व्हाट हैपेंड दिस वीक सर?
I think, hi, good afternoon, Vishu. I think the overall, when you look at the setup, everyone knows that this was a very volatile week because I think ये जो factor है, election outcome was the most awaited outcome, and so definitely not an expected line, and that led to nearly 10% crack in the markets. बट सब्सिक्वेंट टू दैट आई थिंक जो एक चीज समझ में आ रही है कि पॉलिसी कंटिन्यूटी रहने वाली है इवन विथ लेसर और लेस एंड स्ट्रॉन्गर मैंडेट. And I think that is what has helped the markets inch or has helped the markets made a new high or almost a new high. So it's quite a volatile week which we have seen. We have seen a good amount of crack across PSUs, a lot of capex or infra good stocks. And I think quite a dramatic reversal also within 1 week. I think good part is that the VIX has come down sharply because this election-led anxiety has sort of subsided. And big sectors like banking have taken a support at 52-week EMA. And also when you look at Nifty also took a support at 200-day exponential moving average. So I think markets from those supports have bounced back quite smartly, and overall, with the turn of events turning in overall favor of policy continuity, I think things have been very good for the markets this week. At least we are ending on a good basis. And I think I must also highlight that the global setup is also quite positive. This week we have seen global markets inching up 2%. I think rate cuts, which was awaited for a very long period of time, ECB has undertaken the rate cuts of 25 bips. Even the Canadian Central Bank has also gone in for a rate cut. And for us, crude oil prices are also extremely important, and we have seen crude oil prices softening. So the global macro setup has been good. And I think domestic policy continuity has been the biggest positive surprise in terms of continuity, and that has sort of led to the overall recovery in the markets. And like you said, we have reached almost the previous target what we have put in. But what I would want to sort of say is that typically our sense is that if overall we have concluded the earnings season, also RBI policy was also there. So going forward, our sense is that 25,000 is very much on the cards. Now the focus will be more on how the earnings will grow and how or what kind of budget expectation market carries. I think these are the two important levers which are going to drive the markets from here on. But hopefully, we are expecting good things to happen in both these, and which is why I feel that 25,000 is very much on the cards for this year.
Right, sir. I think you already mentioned also another event that could have been very big. I think, but I think general elections के बीच में पता ही नहीं चला, which was RBI monetary policy की meeting हुई थी, and then मतलब वो पता ही नहीं चला कब होके निकल गए because we were anyways in the midst of so much volatility. So what happened in the meeting, sir?
So I think one more thing on the RBI front is that, see, typically the expectation is that RBI is going to follow what US Fed does. I think this time RBI categorically highlighted that they are not following the Fed, which is a clear sort of takeaway from the policy. Otherwise, nothing changed in the policy. This is the 8th time the RBI has not cut rates. Good part is that they have revised the GDP growth rate upwards to 7.2% from 7%. And inflation forecast has been maintained at 4.5%. And also, we haven't seen much of a change in the overall 10-year yields as well. And I think the good part is that when you look at, because the ECB has cut rates by 25 bips, the expectation of rate cut in US has also sort of gone up. Now, there is a 70% chance that the US Fed will also cut rates by September. And when you look at our Indian overall construct, what the market is sort of factoring in is a terminal rate of 5.75%. So about 75 bips is the rate cut, what is expectation. So we don't know whether it will happen entirely in December or prior to that or in between some of it will happen. But in India also, you are expecting a 75 bips kind of a rate cut, and which is why we have been positive on banks overall, because what it does is that obviously ये banks के लिए positive होता है, but जो NBFCs रहते हैं उनके लिए भी positive होता है because उनके cost of funds वगैरह कम हो जाते हैं. एंड आई थिंक एक और चीज जो आरबीआई की पॉलिसी में ये था कि दो जो एमपीसी मेंबर्स हैं दे वोटेड फॉर अ रेट कट. सो आई थिंक so there is a slight change of stance. So not everyone is expecting a status quo in terms of policy. So obviously the rate cut expectations have definitely gone up.
Right, sir. And another thing you touched upon was monsoon being good this year. So how can investors and retail investors expect to play it in their portfolio?
So one is, Vishu, if you look at whenever the monsoon is not good, which is what has happened last year. So last year it was slightly deficient. So जो आपका food grain production है वो थोड़ा कहीं ना कहीं muted हो जाता है. But whenever it is normal or excess, the food grain production is good, and which is obviously positive for inflation. And this time, if you look at one, the monsoon is arriving early. So I think Kerala may arrived 2 days early, and Maharashtra, it should happen anytime soon. And the expectation is that the overall rainfall is going to be 106% of the long-term average. And typically, most of the rainfall in India happens, 70% of the rainfall happens during this season. And also one thing to sort of highlight is that there's a 61 probability of above normal monsoon and excess and 31% of a normal monsoon. So whichever way you cut it, the monsoon is going to be normal or above normal. The probability of that is maximum. Which has not been the case earlier. And I think when you look at how do we sort of marry this to sectors, so FMCG sector was struggling. So definitely a good news for FMCG. We've seen auto numbers, two-wheeler being better, but tractor was sort of struggling on a high base. So obviously that it also helps that sector. And consumer durable is another sector which should benefit from this. So these are the sectors which are going to benefit. And on top of it, RBI is predicting inflation of 4.5%. So it definitely helps in terms of maintaining the inflation and raising the bar on the rate cut expectation.
Right, sir. So talking about sectors that could benefit, we should also discuss Q4 24 results are now completely out. The result season is officially over. So what played out there and going on, क्या expectations बन रही हैं उससे?
So one should understand that Q4 numbers को अगर आप YY basis में देखते हैं तो you will see if you sort of exclude financials, so growth जो top line का था 5.5% था and 7.5% का bottom line पे growth था. तो वैसे ये growth number कम लगता है, but again you need to see that the base is quite high. First half में अगर आप देखेंगे तो करीब 30% का growth था. And उसके बाद में थोड़ा कम हुआ. And then I think another factor which is helping is that we all know that some of the commodities have corrected. So उसकी वजह से एक debasing होता है. Companies do pass on that benefit of low prices, so which is why the top line growth is less. And since they are maintaining their margins, so bottom line growth is higher. But when you look at the entire FY24 in total, you have seen 20% kind of a growth rate, which is very good growth rate, I would say. We have seen margins expanding by nearly 240 bips to nearly 18.5%. So one of the highest margins which we are sitting on. Now, going forward, the expectation is that we will grow at 14-15 odd percent. So just now we discussed that RBI has guided for 7.2% GDP growth rate plus 4.5% का inflation. तो आपकी जो better companies होती हैं या बड़ी companies होती हैं typically deliver higher growth than this. So which is why 14-15% का growth is what we are expecting, and which is what is very normal expectation to have. So obviously that is there. So it gives comfort on the growth front. And I think when you look at the broader universe, the mid caps and small caps, I think there the expectation is even more higher. So when you look at mid cap and small caps, there obviously the growth rate has been higher. Last 2 quarters, the amount of upgrade which have happened in mid caps and small caps is larger. One more interesting thing, if I have to sort of highlight, is that when you look at overall set of companies which are delivering more than 100 crores of profit, I mean, this number used to be about closer to 300 in 2017. Now this number is 8. So there you have about 800 companies which are making profits in excess of 100 crores. So the base has gone bigger, and which is why you see a lot of activity happening in the mid caps and small caps. And no doubt they have rallied, but you're seeing this overall enthusiasm being felt in the mid caps and small cap as a space. Now, sectorally, if you look at, I think this quarter, what has done very well, one is obviously auto, because auto numbers have been good. We are seeing 20% kind of a volume growth. Then power or capital goods. So capital goods, again, the execution has been pretty good. We all know that companies have been sitting on good order inflows. The execution has been good. And then last one is pharma, because pharma is witnessing a revival in their fortunes, especially from the US market. So I think these are the three sectors which sort of stand out in this particular quarter.
Right, sir. Sir, I think thoda sa after these elections, EPC players have also gotten a kind of a boost. So, what is the story behind that?
So one is, I think, see, elections were definitely a sort of a roller coaster ride for players in this entire week. Now, EPC players, especially Andhra-based players, have seen good amount of price runway. So, for example, you've seen companies like KNR or NCC delivering 25-30% kind of a return in the last few days. Now, there is an interesting history to it. So, for example, NCC had witnessed order cancellations of, say, 6,500 to 7,000 odd crores. In the previous regime, prior to that, they were doing very well. And so they had projects even in Amaravati, which got cancelled. KNR had faced some challenges in terms of payment for their water-related projects. Now, when there is a regime change, the expectation is that some of these companies, which have been historically strong in that particular state, which is Andhra Pradesh, I think should get some boost, and which is what sentimentally these stocks have done very well. Not to say that they are being driven only because of this factor, because we've been highlighting that we've been liking these all your construction companies, the entire road players, be it KNR, PNC. A lot of these players have exposure to road segment, plus they've got exposure to water segment. So both the segments are looking good. And on top of it, I think the overall capex spend, specifically in these states, is expected to be higher, especially specifically for Andhra, because I think overall sense is that if you're building a state capital, a lot of capex investment would be required. And I think with the kind of, and they are now part of the coalition, so there is a high expectation that a lot of their financial demands would be met now, and which is giving to this overall boost to the capex, specifically dedicated to companies operating in that particular space. And the results are already there. So we all know that some of these companies have done very well. But our sense is that structurally one should be positive on some of these names, because these are well-managed companies.
Right, absolutely, sir. Sir, my final question, of course, your hidden gem of the week, what will it be?
So before I come to that, one more thing I would want to sort of highlight, Vishu, is that, see, we've seen good amount of volatility in the markets. So what has happened was that one point of time when the results came out, there was a rally, what we have seen in the defensives, especially the likes of IT, FMCG, and pharma. And subsequent to that, we are seeing a rally in the other traditional sectors like capital goods, power, and banks, and all of it. Now, our sense is that if somebody is looking from a near-term perspective, then I think the defensives will offer more comfort, because you don't see these are the companies which are not really driven essentially by policies, or they're not, the policy intensity is not so high. But when you sort of look at from a medium-term perspective, our sense is that the overall construct of the sectors which we have been positive. So we have been positive on the entire capital expenditure as a space, cement, infra, steel, capital goods, defense. Then we are positive on banks and structural beneficiaries like real estate. And then there are some sectors like auto, which are benefiting from the change in the overall template of how the growth pans out. And same goes with power. So our sense is that the overall template which we have been carrying for some period of time will remain the same. But if somebody has got discomfort, I think in the near term, probably some of the defenses will do well. But we are liking the capital expenditure oriented sectors a lot more, given the fact that the capex as a template is going to be the mainstay of this government. With that in perspective, what I'm sort of recommending for hidden gem is L&T. And now L&T is a well-known company. Our target price is 4,300. Now, good part for L&T is that last year order inflow was 30%. This year, the company is guiding for 10%, largely because you have an election year, so a lot of activity will happen in the second half only. And the good part is that the order pipeline is pretty strong at 12.5 lakh crores. They are already sitting in orders worth 4.5 lakh crores. Top line growth is expected to be about 15%, bottom line about 16 odd percent. While people have not been noticing, but one thing to highlight in L&T is that they are pretty good in terms of managing their working capital. And mind you, for any infra company, working capital management is one of the biggest factors to sort of look at. So this company is clearly sort of following that. And on top of it, it also has an exposure towards IT. So our sense is that if there is a rate cut expectation building up, be it in Europe or in US or a bit in India, it does help in terms of discretionary spending, especially in a key market like US. So L&T could benefit from that. So which is why L&T with a target price of 4,300 is our hidden gem.
Absolutely amazing, sir. Thank you. Thank you so much for that hidden gem, and of course for helping us navigate through these volatile waters. Well, that was it for this week. We'll be back next week with Pankaj, sir. Thank you so much for your time.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.